Hey everybody, tonight it is Sunday, August 1st, and we are getting ready to start trading August week 1, August 2nd, tomorrow, Monday. I have been off for a while, so this is my first video in a few weeks. We're taking a look, starting off with the S&P 500 roadmap. And as you can see, here's the week we just traded. This is actually a week plus a day, 1, 2, 3, 4, 5, 6. So this was 2 Fridays ago, followed by the week we just traded. Interesting thing that has happened, though, you can see that here is our all-time closing high from the 26th. Earlier this week, we made a new all-time high and a new all-time closing high. And then we made another new all-time high, it looks like, on Thursday, but failed to close at the new all-time high that we need to go with that, the new all-time closing high. So we proceeded to fail on Friday. Looks like we opened, we tried to trade back up into Thursday's range and failed and closed back down here and probably struggled at the end of the day just to turn this candle green. So I was taking a look at futures. I'll show that at the end of the video. They do look like they're trying to rally a bit. And you know that when we have this setup of the all-time high that fails to make the closing high to go with it, we need to make that new closing high within the next 2 sessions, 3 at the most. So we could be looking at futures taking a shot at a gap up open for Monday and go to start off a new month of trading. If not, then we have a little gap below us here that would take us all the way back to a couple Thursdays ago, the close on July 22nd at 43.67, and that runs right through the road here of the 10 and the 20-day simple moving average. So that looks like a pretty good spot to me for a pullback to. And if we pull back to here and it holds, that is a great buying opportunity. You should be buying some Friday, August 6th calls. If you come in and you feel that we've got a bearish setup, say we come in and we can't take out the high that we put in on Friday and we start to fall lower, you should get into some puts and you should stay in them if we break down below this gap, breaking the 20-day simple moving average. Because then I think we're going to come all the way down here and test the 50-day simple moving average again, like we did a couple of weeks ago with this several days of selling that occurred between July 13th on down to July 19th or so. Let's take a look at the simplified daily chart, the one with the fork on it, and see what happened during that time that we sold off about 2 weeks ago. Came down and we took a look below the 50-day simple moving average and reversed, but look what else we did. You see these gray lines? This is now our long-standing bull fork. It was finally violated. So this fork has been holding steady and holding strong as an element of support for us since late October of 2020. And with this sell-off down to the 50-day, I warned you about this, that if we do a sell-off down to the 50-day, we're going to end up breaking this fork because this fork has risen above where the 50-day simple moving average is. And sure enough, we broke below it. We closed one day below it and recovered back above it. I haven't taken it away yet, but it really isn't valid anymore now that it has been violated. We'll be looking to set up a new element that will carry us on through for the next few months. But we'll keep it on here just in case there is some crazy crackpot move in store for us in the market that would take us up higher, because we could still go after this median line one last time. But I wouldn't count on it. If we break this one more time, if we sell off back down here again and break this fork again, which we would do in order to test the 50-day once again and back test and try to hold this set of lows that were made in the middle of July, that's going to break the fork again, and it definitely goes away at that point. But you can see that our lows throughout the summer, starting here with May, and then in June, and then in July, are building a nice steady line of support below us. So I don't see us selling off any harder than coming down here to maybe test these two lows that occurred about 2 weeks ago. Let's take a look at the options that go with this. Our $11 windows in the Friday, August 6th expiration. The $11 windows went out on Friday here at the 44.30 strike for the calls and the 43.40 strike for the puts. If we look at the roadmap, and one more time here to take a look at that put strike, 43.40 would get us down here. Was that 43.40? Let me look at that one more time. Yes, 43.40. Where does that take us to? That doesn't even take us anywhere near this potential sell-off area down here. So those would make a lot of money for you if we do indeed break down below the 10 and the 20-day and go the distance all the way here to back test the 50-day. because 43.50 only occurs right about here, right about in here at these lows that were set back here a couple of days ago. Not last week, but the week before, during this rally back up. I bet you the halfway back point between this high and this low probably falls right in here as well at around 43.40. That's a level I'll put on the roadmap for us so we can watch that. And as far as the 44.30 calls go, you know, the new all-time high is 44.2997. So that is obviously, you know, the idea that we're going to go after that 44.30 level to make a new all-time high and then go on to 44.50. And if we can make it above 44.50, then we start the 80 handle rule, the climb to 4,500. So that is the idea behind those two strikes. If we come in a little weak and these decay a little bit, if we get that move where we just simply come in here, maybe we back test Friday's low or something and hold that, these might decay down to the $8 window and they would be a good entry. If we fall down below Friday's low but hold in this area, like I first said, that would be the ultimate buying opportunity around the 10 and the 20-day simple moving average, these might even come all the way down to the $5 window. And in that case, you might even look for a lower strike and go with the $8 window entry. Early in the week, I like to do that $8 window entry because the $5 window entry, you know, it's usually a little bit further out of the money than you need to go. On the puts, you know, if we come in flat, these are going to hold that $11 window. If we come in a little higher and fail to make it over Friday's high, and you want to take that shot at maybe a good short entry on another lower high against Friday's, then these are probably going to drop down to the $8 window and be a great entry there, the 43.40s. Okay, I hope this video helped you out and gave you a good idea of where we are at. Thanks for your patience. It's good to be back. As always, good luck and good trading.